All right, perfect. Well, let's start. We have a lot of ground to cover, and we really want to do this in around 30 minutes, like usual. Well, thank you very much for joining our last webinar of the year. It's been quite a run. We done a few of these, and each one of them has had a great audience and great feedback. So today we're going to be covering some of our recent work related to order book data and the combination of order book and on-chain analytics, and some of the things that we're discovering, and some of the things that some of the fascinating patterns that we're seeing, and some of the metrics that we're working on. So a couple of logistic aspects. If you have any questions during the webinar, please feel free to use the Q&A. We have part of our team that is monitoring. I will stop several times throughout the presentation to take questions and answer questions. So don't wait until the end. Let's make this fun and interactive. A quick agenda for today. So we're gonna talk about the challenges of order book, the value of order book analytics, how it complements the traditional on-chain metrics that we're seeing on there, and some of the on-chain analysis that has become somewhat popular for crypto assets. We're going to look at some of the traditional metrics and some of the challenges with those, and what makes crypto assets very specific. What are the difference of order book analytics when applied to crypto assets? And we have a few sort of interesting, provocative ideas that we would like to share with you. A little bit about myself. I'm Jesus Rodriguez. I'm the co-founder and CTO of Into the Block. We're a data science platform focused on bringing intelligence to the crypto space, and probably you have read some of our coverage on some of the crypto news outlets, but we come to work every day trying to solve data science puzzles that provide better intelligence for traders, for researchers, for investors, anybody using crypto assets. Until recently, we were really focused on the blockchain angle. That has been the core, and that has been a lot of what made the Into the Block platform. But recently, we added a new chapter related to order book analysis, and we started discovering some interesting things. So that's what we want to show you a little bit about the principles and the techniques and the challenges that we encounter. So if we start with an obvious question, is what should we paying attention to order books? After all, right, a lot of the technical analysis today is based on pure price and volume. A lot of the on-chain analysis is based on blockchain dynamics. Why should we even bother to pay attention to order book? So here's some metrics about our own machine learning models that you should consider. So there is let's start with data right off the bat. So there is about 30% more volume happening on exchanges than what is reported on chain. So when you're looking at on-chain only analytics, you need to factor that, right? That there is about 30x more volume in any given day happening on-chain or in exchanges that on-chain. And when you look at it, this is not only the ones that fake volume and do crazy things. When you look at exchanges like Binance, it's about 7.6x. When you look at a very regulated, very rigorous exchange like Bittrex, it's still like 3.7x. So those are the margins that you're dealing with. So order book data does matter. I mean, unquestionably. And it complements a blockchain data very nicely. So when we think about the behavior of a crypto asset, if we have products that live in exchanges, futures, options, just the traditional pairs, plus the on-chain activity, that gives me a very holistic view of a crypto asset. And in the first iterations of Into the Block, we heard from you, from our clients, from our partners all the time of, oh, you're still missing exchange data. You should do more on this. And we heard you, and we went to work, and now we have a release, or we soon in the next few hours going to have a release that includes exchange data as well, but with some very unique angles to it. So But the second question that we even ask ourselves is, well, I mean, every exchange out there has order book, right? What's so unique of that? Why do we need to be working on this stuff when every exchange out there has order book? There's nothing wrong with the order book analytics of exchanges, but there are a few things that you should consider, right? First of all, when you're trying to do try to analyze the order book across different exchanges, obviously if you're in a single exchange, that doesn't work. But even more interestingly is when you start combining on-chain data and exchange data into unique signals that are very tailored to the behavior of crypto assets. And then obviously, it's not a secret that many exchanges have had issues with fake volume, with wash trading, with things like that. So taking that level of analysis outside the exchange, it makes a ton of sense, right? Because one, you can create, you can combine data sets, you can use different techniques, and you're certainly not vulnerable to the bias on each exchange. Now, when you think about order book analysis, there are some traditional metrics that have been established across different asset class. So the bid-ask spread is in every exchange, right? That's the difference between the bid and the ask at any given time on the lower level, like this visualization is showing here. And if you're using any exchange out there, you see the traditional visual that give you the spread. And that metric, I mean, we added that too, but everybody has that metric. It's not very unique. Another metric that is very common is the market depth, right? That typically tries to show you the number of open orders on the bid and the ask at different brackets, right? At different levels too, so you get an idea of how the volume is on one way or the other. And these are very, very traditional, very traditional metrics. But what else can we do? I mean, if all we do is this across all different exchanges, we're just replicating things that are fundamentally obvious and not very complex, and more importantly, not very tailored to crypto assets. So what else is out there? So I'll give you 3 data points of how to enrich order book analysis, at least the rules that we follow. One, there's been decades of research papers in quantitative finance in terms of analysis, very sophisticated analysis of order book data. So incorporating that, just plain order book, but more sophisticated analysis that provide various signals. Secondly, combining order book and blockchain data into unique signals that are very specific to crypto assets. And third, could we leverage the power of machine learning, of deep learning, to detect some of the things that are hurting the industry today? Wash trading, fake volume, all those things. We have the tools today to attack those problems. I'm not going to say to solve it, but we're definitely in a better position than many years ago in terms of technology. So those are 3 principles of what can we do that is different. So if you think about three areas: order book data on one side, the intersection with blockchain data, and the power of machine learning, we think the intersection of those 3 is where the magic really happens. We think that if you combine those 3 areas, leveraging machine learning against order book and blockchain data sets jointly, there is a lot that you can do. So what is it that we did? And I'm not going to talk a whole lot about Into the Block. I would like to talk more about the metrics and the principles and things like that, but just one slide to tell you quickly what we did. So we looked at a lot of order book data providers out there and decided to use the Stream API of our partners at Crypto Compare, which we have a great relationship with. We evaluated the API in very detail. We looked at all the deficiencies of many other APIs in terms of performance in terms of the fake volume, and we think these guys did an amazing job in terms of data quality and stability. So we took that data stream, we incorporated our blockchain data sets that we have been working on for a year now, 3 terabytes of data, and start running machine learning models on top of that. And the result is different intelligence signals that combine order book and on-chain data. I'm going to show you some that are in the product. I'm going to show you some that are coming. I'm going to show you some ideas that we're playing with that we don't even have a clue if we can actually solve, but at least we're trying to think hard about it, and at least put those ideas in your head. So the 3 chapters that I told you before: more sophisticated trading signals, on-chain exchange data, and trying to focus on those hard problems that are very specific. Let's take it one by one. Let's start with the more sophisticated trade order book signals and what can we achieve. What's the reasoning for this? Well, there's been decades of quantitative research into finance about analyzing limited order book data. Many quant funds operate fundamentally on order book, and still most of the exchanges, if not all, what they provide is, you know, spread and market depth, right? Like we're not going deeper than that. So here are a couple of things that we did that we think are interesting. So the trade per side signal, which is also called trace sign in quant theory, we just saw the name was a little bit too strong. So this signal measures the number of trades when the buyers cross the spread on the bid side and the sellers cross the spread on the ask side. So it gives you a low frequency signal of momentum one side or the other. So you're actually seeing the trade sign, and you can see here at the bottom that Into the Block is telling you how it's been changing in the last 1 minute, 10 minutes, 30 minutes, 1 hour. As part of our integration with Crypto Compare, we're processing about 15 gigs of order book data every hour. So it's just growing amazingly fast. And the more data we get, the better these models become. So you can also do it for multi-exchanges. So here's an example of Bitstamp and Coinbase compare on the trade side. And fascinatingly enough, look at the peaks, right? When the buyers are crossing the spread on one side on Coinbase, they're also doing it in Binance and things like that. So you can see some of those trends replicated across different exchanges. And with this interactive visualization, you can play and compare exchanges. So this is an example of something that is been established in quant theory for years, but it hasn't been present in the crypto space. And it's an statistical model that most quants understand, and we tried to make it more human relatable and applying to crypto order book. A different one that is also well known is the smart price. That is essentially, it tries to give you a more exact price related to the order book, looking at the variations of mid price on the average bid and ask. So what did we do? We we analyze a mid price over a statistical distribution and give you a bullish or bear, because just seeing the number is confusing, right? So we tried to boil it down to a very quick signal, bullish or bearish, and changes every minute. So if in the next couple of days, when we put this live Into the Block, you go to the Into the Block interface, you're going to see these signals changing every minute. The clock going bullish, bearish, neutral. And here's an example of how it looks like on the smart price for Bitcoin and Ethereum. This is actually live data from this morning. There are a couple of questions, actually more than one. So Christian has a lot of questions about wash trading and fake data. Christian, I have a section just for that. So just give me a few minutes and I'll get there. So that first chapter is more sophisticated signal. The second chapter, that is even the richest one, is what happened when we combine order book and blockchain data. If you attend the previous webinar, as you follow Into the Blog, you think that you know that the obsession in this company is de-anonymize the blockchain, is provide layers of intelligence that help me classify groups of actors. What is an exchange? What is an OTC desk? What's a miner? Because the more I can understand that, the better intelligence I can gather in terms of the behavior of crypto assets. It's not the same to understand that this is an address and this is the number of transactions, that this is an address from Binance, right? It has a different connotation. This is a miner. So we spent a lot of time in the last few months creating machine learning models to de-anonymize layers of the blockchain and provide better intelligence. And the minute you have that, think about that you can understand exchanges on chain, and now you have the order book and you can connect the two. I mean, that's fascinating what you can accomplish if you can measure flow of funds on chain and correlate it with the order book. The relationships are remarkable, but you need to understand exchanges. So we are building on a work that we have done for months, that we even did a webinar about this, that are machine learning models that can understand, if you look at this, what is a hot wallet, what's a deposit address, what a UTXO transaction, what's a cold wallet. This is a picture of Binance, how it looks internally. So we already know that. And because we know that, then there is all sorts of crazy stuff that we can do. One signal that we're shipping is what we call the exchange on change market depth. Remember the traditional visual of the market depth? Well, we're giving you one like that, but on here at the top, you're gonna be able to see the on-chain positions at that specific bracket. So if you're looking at the market, we're going to tell you how many Bitcoins at that bracket are in the Bitcoin blockchain that have been purchased at that price. And in the very near future, we're going to do more and tell you how many are in that particular exchange. So you're going to have an idea of what's on chain and what you're seeing on the order book to get better intelligence. And this is something, it's one of the many things that you can do when you can combine exchange and on-change data. Recently, one of the many talented researchers that CoinDesk has, Galen Moore, he did a work using some of our models in terms of liquidity, and he actually forced us to think a little bit about this concept in terms of what will happen when you combine these two on-chain and exchange data and in terms of liquidity intelligence. And there are a few things that I would like to show you. So imagine, I told you before, we can measure, we understand exchanges on the blockchain, so we can measure flows of data coming in and out of an exchange. We call those net flows. But what will happen when you combine, when you try to correlate the net flows with the spread? So the traditional theory of the spread is that it widens as liquidity becomes more scarce, right? As there's less liquidity, the spreads tend to be wider. So if the net flows go down, if there's more money getting out of an exchange than coming in, you can actually predict that the spreads are gonna be widened, and there is all sorts of, that creates all sorts of opportunities for arbitrage and other statistical art and all sorts of other techniques. So this is an example of a plot that measures the net flows. The net flow is the difference between money coming in on chain and money going out of a particular exchange. In this case, we're talking about Binance, and you can see that day by day for the maximum spread, and you can see the movements. I mean, it's scary how, and as the price drop, you can see that obviously the spread is going out and the net flow is coming down. More money is getting out, which makes a ton of sense. So the same picture, I like to use Bittrex a lot because I think in terms of order book is one of the best run order books in the market, and they do a good job of preventing things from going crazy, sort of. And you can see the same relationships when you see when you combine the maximum spread and the average spread over a day compared to the price. A lot of this data is going to be available very soon. So I'm just giving you some. We have a lot of data to cover in 10 minutes. Now let me give you a different metrics. Instead of money coming in or out, How about if we measure how much money is in the exchange, how much money is in the hot wallet, plus the cold wallet, plus all the deposit addresses, and things like that. We call that inventory. And then we can measure the inventory against the max spread, and that's a sign of risk. So if the spread start going crazy, and the deviation between that spread and the inventory is a sign of risk, that the exchange might be playing with money that it doesn't have in reserve and might have to borrow from a different exchange. And this is a picture from Binance, and and obviously we have the same analysis for Bittrex. So you can see, as the price goes down, a lot of money start coming into the exchange, potentially to liquidate positions from wallets and things like that. So that was the second point, right? We can combine on-chain and exchange data to provide some very unique analysis. Now, the third one that I want to bring your attention to is what happens if we start really throwing like heavy machine learning into this type of problems. So one of my mentors in terms of machine learning and finance, that is a professor at Cornell, and has been doing a lot of work in terms of machine learning for quant. He has this theory that a lot of in traditional markets, there is a saying that alpha is gone, right? And a lot of funds are focusing on smart beta or easier return. And his theory is that that's happening because a lot of the quant models are overly simplistic, and they're based on linear regressions and all that. That the evolution of deep learning and neural networks that has happened in the last few years are allowing to create models that do discover alpha in those, and that's for traditional asset class, traditional capital markets, but the same principle applies here. So when you start throwing like very deep, more sophisticated neural network architectures at those problems, it's fascinating what they can find. In this chapter, I don't have a whole lot to show you, but I'm going to tell you two things that we're working about. I'm actually going to show you one, but I'm going to tell you two things that we're working about. So, Christian, this is your answer. So, crypto today is being plagued by a disproportional fake volume, wash trading, market manipulation by exchanges. And we also saw the famous report at the beginning of the year, which I thought it was remarkable, except that I think those techniques the minute the report came out, it became obsolete, because all those techniques can be recreated in 1,000 different ways, right? So it's really hard to keep up with that, except if you can actually train machine learning models that learn to identify fake trading and wash trading. Because they learn with more order book data, they will learn new patterns. It's not a series of rules that you're trying to match trades at the same time to declare wash trading. So imagine if you actually look at an order book and you can see where that money goes on change, and try to start drawing those relationships and train models that based on the time of the trade, the volume, the frequency, all sorts of things, start detecting wash trading. This has been done for other traditional market. There is a ton of research in this space, and can be done for crypto. And we're certainly we're taking a swing at this problem. So let me give you a very simplistic view of this. That actually Chainalysis, to keep giving credit to more people, Chainalysis have done some experimental work in this space. So imagine that I told you before that there is the number of on-chain reported volume compared to exchanges disproportionately large. So we measure both, right? And we have a ratio into the block that measures both. And we know that there is that ratio should behave certain way, right? What I'm seeing on chain with what the order book is saying, it cannot go beyond X number or this number. It should be between this range. So that's a very easy way to determine when an exchange is just faking stuff up, right? When those numbers go completely out of the whack and you have a ratio that does not correspond with your historicals, or is certainly a la par with the Binance or something else, and your order book is saying something that is completely uncorrelated with what we're seeing on chain, that's a very clear sign of market manipulation. And so this is how it behaved for Bittrex, and you can see it's a very well-run exchange, and you can see that those ratios behave in certain way and relatively stable. And this is like once you have all the work on machine learning to detect exchanges, doing this is like nothing, right? This is not even a sophisticated machine learning. It's using a sophisticated machine learning model, but after that, it's just like a very basic statistical calculation. So the second part that is interesting about applying machine learning models is obviously price predictions to order book data. I mean, that's a holy grail of this thing, right? If you can predict price, if you can predict directions in the short term, I mean, why wouldn't you do that? That seems to be what every trader is aspiring to. So our thesis here, we don't have a solution for this yet. Very soon we're going to show you something. So our thesis here is, there is obviously no model that can predict the market all the time. You need many, many models, and they're going to fail quite a bit. But our overarching thesis is that the more you involve sophisticated neural network architectures into this, the better your chances are. Like, it's hard to do this at a statistical one factor, one indicator trying to correlate with price, or a very basic statistical formula. It doesn't work. Markets are too complicated. Markets are more complicated than most of the machine learning problems that we're tackling today. The data sets are complicated, they're uncorrelated, they change all the time, they're influenced by all sorts of macro factors. So you need very complex, intelligent structures to tackle those problems. So the next analytics provider that tell you that they have a correlation between one number and price, please run away from that. I mean, because that's mathematically impossible, and it has been impossible in all markets until now, and crypto is not going to be different. So we're working on predictions. We're working not to time the market, not to give you exactly what the price is going to be, mostly to predict direction hour by hour. So very soon, you're going to see something into the blog that you're going to have prediction models for every asset on a short time basis. And I don't like to make announcements in this thing, but that's something that we have been working on it for a while. We're so sure about it that our next webinar that is just being displayed today is gonna show you that problem. It's gonna show you that how are we doing predictions, and what are the architectures we're using, what are the machine learning techniques, what worked, what didn't work, what are the challenges, and how do we tackle this problem, where did we fail, and what are the areas that we're finding some success. That's going to be our first webinar of 2020. I hope you enjoyed this. This is pretty much what I have. I'm going to go to a summary, but before, I want to give you a quick message about Into the Blog. So Into the Blog is going to announce V1 in the next few days. We're going to unveil the first version. And I wanted to thank many of you that are in this webinar that have been part of our community, because at the beginning of this year, Into the Blog was just an idea, right? It was something that was that we were passionate about solving hard problems about data science with crypto assets, and but we didn't have much other than we knew that we had the data science expertise, and we knew we were building a very good infrastructure. And to see how the platform has come, how far have we come in a single year, almost 50 indicators. We're gonna announce 18 clients of the top brands in crypto in the next few weeks. The industry recognition, and more importantly, sort of the respect that we have been working in hard problems, and we're not trying to take the easy way out, it means a lot to us, and also your help. A lot of the ideas that you saw today about order book, A lot of those things came from you. Like a lot of that feedback was given by our community, and a lot of people help us to try to identify the good signals. So from that, I would like to thank you, and you're going to see a lot of cool stuff from us coming in 2020. So a quick summary of what we discussed today. Order books data set do matter. I mean, you cannot ignore them. You cannot just go with on-chain data. It's misleading. There is a natural complement between what you see real time and exchange and what you see on chain in a longer time intervals. To obtain meaningful intelligence, you need to look beyond price and market depth and a spread. I mean, you need to dive deeper. If not, you're doing what everybody else is doing. And there is the natural combination of on-chain and blockchain data can yield all sorts of interesting intelligence. With that, this is all I have in terms of the webinar. I'm going to go through the questions real quick. I hope I answered some of the Christian's 20 questions. Anonymous attendee is asking me, what machine learning models are we using? Many, but if you can attend the next webinar, we're going to be more transparent about this. But we're doing a ton of work with, if this means anything to you, with recurrent neural networks with convolutional layers and long short-term memory architecture. So those are very deep learning architectures, but we're doing a ton of work in that with those type of architectures. Joshua, can I say any? Can I mention anything in terms of the relationship between order books and flash crashes? I don't think we have anything particularly innovative. I'll give you a couple of things that we observed recently, particularly with the Bitfinex crisis. We thought that with everything that was going around Bitfinex, we were going to see a ton of bad behavior on the exchange and money flowing out and things like that. And we were surprised that that wasn't the case. We monitored the exchange for a week or so, and nothing really happened. So what tells me is during the crashes, you could see the spread widening and all that, but their reserve holding and their inflows and outflows being very consistent. So the lesson we learned is that a lot of our bias and in terms of how exchanges behave are wrong, and that the data shows many times different things than what we're thinking about. George, what about graph convolution neural networks? Absolutely. So not about the graph part, but about convolution neural networks for predictions and things like that are a killer, because the convolutional layer, what they do is they extract, instead of trying to say, oh, I think the spread is going to help me predict the price or whatever, you can have a convolution that just figures it out for you and learn. Anonymous, I don't know if this is the same Anonymous or a different Anonymous, but it's asking what's the granularity of the data. We get order books about 100. We get the order books and the trade minute by minute, about 100 on the beta on Ask, and I said we're adding about 14 gigs of data every day with this, so it's growing extremely fast. I think I answered all of them for the most part. Thank you very much for joining this and the many webinars you attended, and we will be sending you the invite to the new one to cover predictions. I hope you have a blessed holidays and a very happy new year, and we hope to see you. Watch out for the Into the Blog announcements, and we hope to see you in our next webinar. Thank you very much.